Hi, I'm Bruce Vanderlaan, Managing Director at Mertz Taggart. We are a mergers and acquisitions advisory firm or investment banking firm operating in the home-based care industries. That's home health, home care, and hospice. I want to talk to you about our valuation process and how it will benefit you today. We'll take a look at our agenda. So I want to explain what a valuation is and how you as an agency owner can benefit from a valuation today. I want to talk about the kind of data that we're going to gather to perform a valuation. I'll tell you how long it's going to take to get us ready to get the valuation done and then to review it with you. And finally, I want to talk about what makes our valuation process unique. So let's start with what a valuation is, and we'll also talk about how you as an agency owner can benefit from a valuation today. So a valuation, really the ultimate goal is to provide you with a presentation where we've reviewed and explained the valuation model and work with you to provide you with an opinion of value based on our knowledge, experience, and connections in the marketplace. The benefits to you as an agency owner are that by understanding a valuation or the value of your agency, you can decide what to do next. You've got choices. When you understand, when you have the knowledge, that gives you choices whether to grow the agency and continue on that trajectory, or whether to start your exit planning and think about going out to the marketplace. Next, knowledge of the key valuation drivers is important for you so that those are things you can focus on. Data scientists always talk about that which gets measured gets improved. So if you know the valuation drivers and can measure those drivers, you can improve those drivers, and it helps improve the valuation today to make the agency more profitable, more valuable today, and down the road when you do ultimately plan that exit. Third, we can identify the low-hanging fruit, if you will, in order to increase value. There are certain things that, as an agency owner, you may not be aware of, but things that we, as mergers and acquisitions advisors, are aware of and can help point out and can really kind of pick that low-hanging fruit and add that to the value of your agency. Fourth is you're getting the existence of a fully built and dynamic valuation model. It's quick to update, and it includes new data each time period that we update it. We've done it frequently on a quarterly basis, a semi-annual basis, or annually. We've done it, in one case, I remember we did it every year for 5 years before the agency owner decided to go out to market. And it's a great way to understand your trajectory, your history, and where you are, and what the projections look like for the future. The more of that kind of data that you can provide, or we can help you provide, the more valuable your agency is going to be, all other things being equal. Fifth, we're going to provide you with knowledge of what to expect and how to prepare for the M&A process. And that, I think, is a critical component of this, because the process can be overwhelming. I wouldn't expect an agency owner to understand the M&A process and everything that goes into it. Your job, your process is taking care of people, and our process as M&A advisors and investment bankers is taking care of agency owners, helping them go to market to maximize the value of this asset, this business that they've built. Sixth, we're going to give you insight into the current mergers and acquisitions environment and its outlook. This is what we do. This is the industry that we work in. These are people that we know, we have relationships with, and we're constantly involved in it. So we understand what's going on in the market today, and based on not only today but historically what we've seen in the market, we will have a good sense of what is going to happen in the future, what reasonable projections we can make. The seventh thing we're going to do is we're going to help you understand the pros and cons of the different available paths to market for your agency. There are a number of things, a number of different types of buyers that we could talk to, a number of different ways to go to market, and a number of different things that you could do in order to maximize your value. And finally, we're going to look at the potential transaction structures and terms. Again, I wouldn't expect any agency owners to have great knowledge of structures and terms, but in addition to my work as a mergers and acquisitions advisor or investment banker at Mertz Taggart, I'm also a practicing corporate attorney. I've been practicing for a lot of years, and I've done a lot of transactions, and I've seen a lot of different structures and terms, and I think that the knowledge that we've gained, not only through my practice, but the knowledge that we've gained through the multitude of transactions we've done, will help you to understand, look out for, solve for the terms and structures that you'll see in the marketplace or in a merger or acquisition. Let's talk about the kind of data we're going to gather to perform a valuation. Our expectation is, and your expectation should be, that the kind of data we're going to ask for is data that you will readily be able to put your hands on. It will not take a lot of effort to gather this data because it's the kind of data you use day to day in your agency. What we're going to look for, we start with the financial statements. So the profit and loss statements and the balance sheets by month for the past 3 years and the current year to date. We're going to want to look at EBITDA adjustments. So EBITDA is earnings before interest, taxes, depreciation, and amortization. It's a standard sort of add back, if you will. You take those items, interest, taxes, depreciation, amortization, you add them back to your net income, and you get your EBITDA. Then we're going to go beyond that. What we want to look at are adjustments to EBITDA so that we get to adjusted EBITDA. And those adjustments are critical factors. Almost all of the clients that we work with in the home-based care industry are agency owners who are either individual owners or husband and wife owners or family owners of the agency. And in those cases, you're very often going to see adjustments that are really owner discretionary type of expenses that can be added back. And in addition to that, you're going to see some one-time expenses that are really not operational, that would not be expected to continue. They can be things like a frivolous lawsuit expense that you incurred, or the expense to do some repairs to the office building that you wouldn't expect to see. Those kinds of things, those one-time expenses or unusual expenses that are not operational, get added back as adjustments. In addition, I talked about the sort of owner discretionary type of items. I've seen travel, I've seen insurance, I've seen family members on the payroll who really don't perform a necessary function for the agency, and all of those things would not be expected to continue under new ownership, and so those can be added back as adjustments as well. And finally, we look at market rate adjustments. It's not unusual for some agency owners to own the real estate through a separate company and the agency through a different company, and then charge the rent to the agency. In some cases, that rent is above market. In some cases, it's below market, and so we need to adjust that for market rate. What would a reasonable rent be for that office, for the agency? Likewise, we'll see market adjustments for salaries or compensation for agency owners. Similarly, sometimes agency owners will pay themselves well above market, and sometimes they'll pay themselves well below market. So we may need to either add back some salary or reduce that by what the market rate is, what the expectation would be for somebody to step in and run that agency if the owner were to sell or to not be involved anymore. So those kinds of adjustments, the one-time non-recurring adjustments, the unrelated to business type of adjustments, and the market rate adjustments are keys to adjusting the EBITDA and to providing that basis, because it's in this industry, in the home-based care industry, it really is a multiple of adjusted EBITDA that very often determines what the purchase price is going to be for an agency. The other thing that we're going to gather, the other set of data, is the census metrics. Now, each of the industries in the home-based care industry as a whole, home health, home care, and hospice, have their own unique sets of census metrics, but each does need and does track census. So we'll request the census metrics from you for the services that you provide, similarly past 3 years and year to date. Once we've gathered all of that information and we put it into what I call the deliverable, the valuation, we'll provide you with that information. And in gathering this information, we'll provide you with templates that you can fill out that will help you to provide us the information to get to that EBITDA and the adjusted EBITDA, and to be able to track those metrics for you. So the next question I want to talk about is how long is this going to take? So as I said, I'm also a practicing corporate attorney, and I've worked with a colleague representing some mutual clients on a number of cases. And the funny thing is, he was asked a question very early on in our relationship, how long it was going to take, and his response was, every answer you get to a question from an attorney starts with, it depends. And in this case, how long it's going to take depends. It really depends, first and foremost, on how long it takes for us to get the information. It's going to depend on the level of detail that's within that information. If we have to ask for more detail and ask for more information to flesh that out so that we can have a fuller understanding. It's going to depend on your accounting basis. Most businesses are on cash basis. What the market wants to see is accrual basis. And again, I said I'm a practicing attorney, and as an attorney, I'm not going to tell you to keep two separate sets of books. But I'm also a mergers and acquisitions advisor, and I'm going to tell you to keep two separate sets of books if you're on cash basis. Now, what I mean by that is, if you're on a cash basis, you have to report your income to the IRS, of course, and most of the time that's done on a cash basis. What we're talking about is converting your accounting records to an accrual basis, and what that does is it smooths out the cash flow. It's really a surrogate for cash flow over a period of time, and usually we're talking about a year. So we want to have both sets to be able to look at. We want to see what cash did the agency actually receive and outlay, and really what was the accrual. And so accrual is when you've provided the service, that's when that revenue accrues. When the bill comes in, that's when that bill accrues. On a cash basis, you account for it when you're paid for the service, or you account for it when you've paid that bill. So that's really the difference. We're going to want to take a look at your expense breakdowns between your direct cost of care. That will give us your gross margin, removing or subtracting that from your gross revenue. And we'll also want to see your other general expenses of the agency, which will also give us some ability to focus on areas that you might be able to improve, or that you might not be aware of at this point. That generally takes 2 to 3 weeks to gather the information, and then once we've gathered that information, it generally takes us another 2 or 3 days to put that into the valuation that we can then sit down and discuss and go through with you. So what makes our valuation process unique? Well, first, like I said, it is based on knowledge, experience, and relationships. Knowing the industry, being in the industry day to day, talking with other people in the industry, The valuation process is really an art and a science. The science certainly comes from the data that we can gather, but that knowledge, experience, and contact with the industry is the art part, and the two really have to work together. So our valuation model serves as a foundation for you as an agency owner and for your agency to successfully get through a quality of earnings process, which is part of the due diligence process, usually the first part of the due diligence process, and maintain that value intact. We work very hard to provide a reasonable and rational and dependable valuation, and I liken the valuation process to really a preliminary due diligence. We're going to dig in and gather some of the foundational, the base of the pyramid type of information that will make the valuation guidance solid when you decide to go to market. We conduct each of our valuations diligently. We dig in, like I said, doing a preliminary due diligence and gathering this information. We're going to provide you with a critical number for you and your planning process. That number will enable you to decide, do I want to continue to grow the agency, or is this the point at which I want to consider my exit planning and to strategize going to market in the near future? It's a number, like I said, we try to make that as solid as possible. We believe that our expectation, the number that we provide, will be valid and will be borne out in the marketplace because of the diligence that we provide and the knowledge and effort that goes into making that valuation. We'll dissect the financial statements to obtain as much information as possible. Doing that will enable us and you to see any potential gaps or any potential questions that may come up, and it will help to determine and provide a reasonable and supportable valuation. During the valuation presentation, we'll guide you through it. We'll help you to understand it. We'll help you to understand the key elements of it. You can ask questions, of course, and of course, anytime come back and ask more questions as they pop up. But giving you what we think the valuation is and giving you an understanding of not only what it is, but how we got there is critical to helping you plan for your agency and for your own future. And finally, we're going to provide you with unique information about the mergers and acquisitions market today and what we can expect in the near term. And that information will also help guide you in your planning process, whether it makes sense to put off an exit or whether it makes sense to consider an exit sooner rather than later. Thank you.